Okay, let's just do a really short video and let's go over these zones real quick. So we have our standard zones that we like to use in the room. Our standard zone is a 25 zone, and then you can put additional zones on for deeper retracements, deeper liquidity grabs, which would be our 35 zone, which are these dots. Deeper zones are your 100 or 200 that don't come up too often, but when they do, you can see some nice sustained moves. So this is just our standard chart, 135. This is on the NYMEX metals RTH6. What the NYMEX metals means is it just means it's going to start looking for these fresh zones starting at 8:25 in the morning, which is a couple more minutes from now, and they'll start printing these fresh zones, and it will run till 1:30 in the afternoon Eastern Standard Time. So we have a 24/7 chart that works 24 hours a day around the clock, and then there's a NYMEX that likes to really work well on getting into these zones and getting a retracement inside of them. So let's take a look at Confluence and what Confluence means. So you'll notice that if you get two zones that overlap each other, you get what's called confluence. So you can see that, let me make this a different color. This happens quite a bit. Let's make this one red. So you can see the 35 zones in red and the 100 zones in green. So you have an overlap of zones. So you get into the 100 zone. There's your 100 zone. And consequently, you get into the 35 zone at the same time, and they overlap. So this is what's called a confluence zone setup. These are very powerful reversal levels because you're getting two sets of different zones that are confluing at the same time. So because we only have certain specific zones that we use, so those are called, that's called a confluence zone buy. When you see these, we're looking for a reversal candle to fire. So when you see these charts I sent out to you, that's what we're talking about when I say confluence. Two zones that overlap here. And there is your reversal candle right inside of both of the zones. This would be your entry candle. Now this is the NYMEX, so it started trading at 825 here, 825. These zones start printing, and then we got the buy at my time of day trade, which is 9:40 trade. An hour and 20 minutes later, the pull in would be the entry would be a couple ways. You can get the entry after the V bottom, or use our automated strategy to enter the system right at the first liquidity grab. This is the first LG, and it was a nice move, 62.11, and it caught that move all the way up, almost 30 points into the 130 move. So now, so if you get a single zone trade, it'll look like this. So here's the difference. Here's a single zone trade. You come down normally to the zone. It's our 35 zone, got inside of it. It just cannot break it. You do not want to break these zones. You don't want to break the low of that 35. So here's the difference. I'm skinning them down so you can see the difference. So this is our normal zone buy. So just a normal liquidity grab. And then when they're stacked on top of each other, you'll have confluence. All right, so that is a normal versus a stacked zone. The key is that you do not want to close below these zones once you get inside of them. Then you have a normal zone. Yesterday, it caught a real big one. This is yesterday. So start trading 825. See, it's just started printing right now. Yesterday, it caught a big, nice move up to the upside on July 2nd. Here's your reversal candle. Came right down to the 35 zone. This is a buy setup. Caught that 44 all the way up to the high of 63. Almost a 20-point move. All right, so this is not a Confluence trade, though. A Confluence trade a couple days ago, that's when they're stacked on top of each other. Yesterday is just a normal, that's a normal zone buy off of the NYMEX. Now, these zones are static, so you can use a lower Renko candle if you want. These are static zones, so let's go down to 1120. If you go down to 1120, these zones are static. So you don't have to use a 1135. These zones are static, so they are reversal zones. They don't repaint. So you can see here, this is what a 1120 would look like after we started printing yesterday. Right there, went right down to it. That's a beautiful liquidity grab right at 846. So start printing at 825. You're going to start seeing setups around 835 or so, 840. It printed right at 846. At 6240 on the 1120. Right down. That's a beautiful liquidity grab. I mean, that is textbook for the entire trading day, the trading session. Nice move. Okay. And then, like I said, when they're stacked like this, you can see the 35s over top of the 100 here. When they are stacked, this is called Confluence. So watch when they're stacked. I mean, we just had newsprint. So what's our level we're looking at? On this specific chart, we have our 35, 100, 200 zones. So right now in live trading, what are we looking at? We're looking like yesterday. See how it came down? They pulled all the counter trend traders in the market, grab liquidity, reverse right at the zone. So what we're going to look for is a reversal. You'll want the market to come down, reach this zone area, get a reversal, and that's what we're going to look for. If the market doesn't close, if it doesn't get a reversal candle inside the zone, it doesn't qualify, then you'll look for a deeper zone. Let it come down to this level. Look for a reversal zone. All right. You can see we're sort of stacked right here. We're stacked on top of each other at 35. So this is called a confluence zone right here. So we do have a confluence down here. If we do get down to that 39.25, that's an area to look out for in today's session, to watch out for.